Hello to all traders and welcome to another edition of Stock Watch. This video today has been brought to you by Orbex, and once again we're looking at a very negative day for Asian and American stock markets. We've seen the likes of Target and Walmart plunge quite significantly yesterday, and also the three heavy indices of America, the Dow Jones, the Nasdaq and the S&P, all shed quite a fair bit of points yesterday. We're looking at the Dow shed over 1,100 points or 3.6%, and this is actually the biggest loss since June of 2020, which is quite significant. Almost a 2-year loss in a daily session, and the S&P and Nasdaq followed suit as well. And this is all over concerns that these rising prices globally have seen, more and more worries about recessions and also slowdowns in government spending as well. So you've got the Fed, for example, trying to hike basis points up as quick as possible to try and counteract this inflation that's happening across America. And also we saw the UK year-on-year inflation hit 9%, which is the highest in 40 years yesterday. So when is this all going to end, and how bad is it going to be for these indices going forward? Well, for bears in particular, great day yesterday, but for bulls, not so great in that respect as well. So a lot of investors are now calling for a 3/4 point rate hike in the Fed's next meeting next month. So Fed Jerome Powell's under a little bit of pressure to try and maintain this steady balance between increasing inflation and obviously these hikes in the basis points in interest rates as well. So we'll see how that will work out in the near term. But if you look on the Dow, first of all, got it on the daily chart, I just want to accentuate the big loss that we saw yesterday. And since then we had this choppy downside channel kind of coming into effect. If we just put that into place roughly, we were inside this kind of descending channel, but now we've kind of broken out of it completely, and we are looking at the downside now. We're going towards the 31,000 handle, which is quite significant. If we pull this back just slightly, we haven't seen these figures since the beginning of 2021. And as I said, this big downside candlestick here is the worst performing daily candlestick since June of 2020. So more and more reasons to be concerned of not only an American slowdown, but a global slowdown as well, especially, like I said, with the bad news in the Asian stocks yesterday as well. So at the moment, the day has kicked off with another negative candlestick as well. And if we have the assistance of the Ichimoku cloud, we are looking like now we had a sharp rise up, but then we had this great dissension, and now prices are basically looking for support at the recent lows that we saw not so long ago, earlier this week, and in the back end of last week, sorry. So with that being said, I'm just looking now to see if there's any signs of a slight hidden bullish divergence. If prices drop a little bit lower to this region here, we could have a slight bullish divergence, which could give us some support. However, in the near term, it's not looking likely at the moment. Every time we have a very negative day for the US indices, we do get a little bit of a bounce back, but then we usually hit a slight crescendo and then start falling lower. So it'll be interesting to see, if prices can actually move up to the lower border of the Ichimoku cloud, roughly about the higher end of 31,000, and then we can start seeing some kind of signal and momentum either to the upside or heavy resistance, and then a move back down lower. So interesting times at the moment. If we just look on the S&P as well, kind of moving in tandem with the Dow, not as bad on the daily performing daily performance. However, this big red candle has seen quite a shift in momentum, and like the Dow, we had this kind of choppy descending channel here, not to scale obviously, sorry about my freehand drawings here, but just to put it into perspective, we are looking now that prices will possibly stay in this lower zone here. And if we just zoom in for better clarifications, as you can see, it's not as bad as the Dow Jones. The Dow Jones did have a day to forget. The S&P also had a day to forget, but it's not as bad as in the sense that we are looking now, it hasn't fallen as low as what it could have done, and now prices are kind of plateauing, and we could see a bounce to the upside. I'll just remove these drawings one more time for you so it's a bit easy to see. And on, like the S&P, like the Dow, we are looking now for signals on the RSI, but in the near term, this is looking very, very bearish at the moment. Very, very bear flags, and we'll see if the S&P and Nasdaq can start moving higher as well. Just have a quick look on the Nasdaq as well. Exactly like the S&P and the Dow, very bad performing yesterday, and we'll see if these prices can start pushing up, and just keep an eye on all the headlines going forward, because the Fed rate hike is on the tip of everyone's tongue. So next month's meeting will be a big one. So we'll see what happens tomorrow for the latest in stocks and indices and all the forthcomings in the main headlines, and we'll speak again tomorrow. Bye for now.